I think the Fed is willing to have a little recession in order not to have out-of-control inflation.
In a world of economic foresight, Charlie Munger, the sage investor whose predictions have sent shockwaves through financial circles. Brace yourself as Munger envisions a potential economic doomsday where a catastrophic collapse looms over the horizon. In this video, I will explain Munger's ominous prophecy, dissecting the factors and insights that fuel his prediction of a worldwide unraveling. Get ready to rethink stability and confront the possibility of a future where everything changes. Introduction to Charlie Munger's prediction. Different puzzles and an intricate web of factors shape our economy, and there are people who spent a lifetime deciphering these puzzle pieces. Charlie Munger is one of the people who has spent his life studying and analyzing the economy. He is one of the most brilliant minds that people look up to. But what's the story behind his prediction of an economic catastrophe? The global economy operates interwoven with trade, investments, and debts. Munger warns that a significant disruption to one element could initiate a domino effect, toppling the entire structure.
It's a huge danger once you've got a populace that learns it can vote itself money. If you look at the Roman Republic, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-run danger we have, probably, apart from nuclear war. The safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis.
Imagine a set of falling dominoes, a simple yet powerful analogy for the economy's delicate balance. Each domino represents a crucial aspect like housing, jobs, stocks, and more. Now, picture a heavy blow knocking one of these dominoes down, like a housing market crash. What happens next is like a chain reaction. The first domino topples, people lose their homes. Then comes the second, they start cutting back on spending. As it crashes down, the third domino reveals itself, businesses start to struggle. It's like a sequence that keeps going, one after the other, with each falling domino creating a ripple effect. But what sets off this potential crisis? It's often a blend of different factors colliding like cosmic forces. Just like a storm brewing from various weather patterns, economic storms form from a mix of triggers. And there's someone who's a bit of a wizard at spotting these triggers, a person named Charlie Munger. Imagine him as a weather forecaster for the economy. He's got this uncanny ability to predict when those storm clouds are gathering. Excessive debt, wild speculative behavior, or even political turmoil. He sees these as signs of an economic tempest on the horizon. It's like watching the sky and seeing those clouds getting thicker and darker. Munger's the one who knows what those clouds mean for the economy. He's like a financial detective, reading the signs and sounding the alarm before the storm hits. So, next time you see a row of falling dominoes, remember that it's not just about the pieces hitting the floor. It's about understanding the triggers, the connections, and having someone like Munger who can see the storm coming.
I think the best road ahead to human happiness is to expect less. I think it's going to get tougher.
The basis of Munger's warning. Charlie Munger's prediction of an impending economic crisis has stirred widespread attention, and the foundation of his warning is a blend of astute analysis, prevailing trends, and his deep understanding of economic principles. I can identify the key elements supporting Munger's conservative view by delving into the most recent papers and news. Geopolitical uncertainties. Recent geopolitical events and tensions can significantly impact economic stability. Munger's caution aligns with reports that highlight trade disputes, political turmoil, and global power shifts. Such events can disrupt international trade, currency markets, and investor confidence, all elements that can contribute to a crisis. Asset valuations. News sources discuss soaring valuations across various asset classes, including stocks, real estate, and cryptocurrencies. Munger's apprehensions resonate with concerns that these valuations might not be sustainable, posing a risk of sudden corrections that could initiate the type of crisis he anticipates. Lessons from previous crises. News often references historical economic crises, such as the 2008 financial meltdown. Munger's stance is influenced by the lessons learned from these events, suggesting that similar patterns of unchecked risk-taking and inadequate safeguards could lead to another catastrophic outcome. Debt burden. Munger's concerns are rooted in the escalating levels of global debt. Reports highlight a surge in government, corporate, and consumer debt across various economies. The mounting debt burden could potentially lead to financial strain, defaults, and destabilization of markets, factors that align with Munger's prediction of a collapse. Speculative excess. News outlets report instances of speculative excess in financial markets, where investors flock to risky assets driven by high expectations of returns. This exuberance, if unchecked, can lead to asset bubbles that eventually burst, triggering a cascading effect that Munger warns about. Unprecedented stimulus. The injection of massive fiscal and monetary stimulus measures by governments and central banks has raised concerns about inflation and the potential for an overheated economy.
Basically, like the existence of the Fed. I think in a world of fiat currencies, we need wise central banks.
Munger's warning aligns with reports discussing the delicate balance between stimulus and economic sustainability. Interconnected global economy. Reports emphasize the intricate interconnections of the modern global economy. Supply chain disruptions, financial contagion, or a shock in one part of the world can reverberate globally, aligning with Munger's assertion that a seemingly localized event could trigger widespread collapse. Historical context of economic crises. Let's take a trip back in time to understand why Charlie Munger is worried about an economic disaster. Imagine different moments in history when the economy went haywire, teaching us important lessons. These stories help us make sense of why Munger is sounding the alarm. Tulip Mania, 1636 to 1637. Imagine people going crazy over tulip flowers in the 1600s. Prices got incredibly high, and then suddenly everything crashed. This reminds us how people can get too excited and make prices go way up, only for everything to collapse. The Panic of 1907. Picture a time when banks in the US were in big trouble because they didn't have enough money. Someone named J.P. Morgan had to step in to fix things. This shows that financial systems can be fragile, and we need rules to keep things in check. Asian financial crisis, 1997. Move forward to the late 1990s. Many countries in Asia faced huge money problems. They borrowed too much, and their money lost value. This crisis teaches us that what happens in one place can affect the whole world, like a chain reaction. Global financial crisis, 2008. Think about the time just before 2008. The housing market in the US crashed, and everything went downhill from there. This shows us that a crisis can spread like wildfire when people take too many risks and depend too much on each other. These stories all have something in common. People getting carried away, not having good rules, taking too many risks, and everything is connected. Munger's warning is like a reminder bell, saying that if we don't learn from history, we might end up in another big mess. Critiques and skepticism. While Munger's warning has gained attention, it's not without its fair share of doubters and counter-arguments. There's a whole bunch of critics out there who are shaking their heads at Munger's dire predictions. They're raising some pretty valid points, so let's break it down. First off, these skeptics are saying, hold up, today's economies aren't like those flimsy paper boats of the past. They're pointing to the regulations and risk management strategies that have been put in place since previous economic nosedives. Then there's the whole times they are a-changin' argument. These observers are pointing out that the global economy is a shapeshifter. Technology's changing the game, industries are morphing, and trade patterns are flipping. This throws a curveball at Charlie Munger's reliance on history to predict the future. It's like saying, hey, this ain't your grandpa's economy anymore. But wait, there's more. These skeptics are waving a flag for the cavalry, governments, and central banks. That lessons learned from past crises have made these institutions more prepared. They can swoop in and save the day, preventing a total meltdown. It's like they are the firefighters ready to douse the flames. Overall, the intricate interconnections within the economy and the unpredictability of external events make it a daunting task to accurately foresee all possible outcomes. The complexity underscores the potential for Munger's prediction to be influenced by unforeseen variables. Finally, critics stress the need to balance caution with a practical understanding of the complexities inherent in the global economy. Vulnerable sectors and assets. Now let's delve into the specific areas that Charlie Munger highlights as susceptible and explore the mechanisms through which these vulnerabilities could trigger a crisis. Housing and real estate. Munger considers the housing market a critical factor. Consider a situation in which excessive borrowing and speculative pressure cause house prices to climb to unsustainable heights.
How do they decide how much a building like this is worth? And the answer is, it's whatever they can borrow without signing their name. There's all kinds of activities that arrive out of commercial real estate development, which occurs on a big scale. But it all has consequences, and I think we are starting to see the consequences of people who could borrow at 2.5% and find out it doesn't work at current rates, and they hand it back to somebody that gave them all the money they needed to build it. Charlie's had more experience in Charlie got his start in real estate, though. I mean, Charlie.
Yes, it's difficult. I like what we do better.
In the event that this bubble collapses, homeowners may find themselves in default on their mortgages, which would trigger foreclosures and have a knock-on impact across the financial system. Corporate debt. The accumulation of corporate debt is another area of concern. Imagine companies taking on more debt than they can handle, relying on low interest rates to sustain their operations. If interest rates rise, these companies could struggle to meet their obligations, potentially leading to defaults and a wave of bankruptcies that could spread through the economy. Financial market speculation. Consider a situation where speculative frenzies overrun financial markets. Munger fears that investors might get caught up in irrational exuberance, driving up asset prices to unsustainable levels. When this bubble bursts, it could trigger a panic, leading to rapid sell-offs and a plunge in asset values. Currency fluctuations. There can be a possibility of a sudden and significant currency fluctuation. Munger highlights how interconnected currencies are in our global economy. If one major currency experiences a sudden devaluation, it could trigger a chain reaction of currency shifts and economic instability, impacting trade and investments on a global scale. Technology disruptions. Reflect on the rapid pace of technological advancements. While these innovations bring opportunities, they can also disrupt traditional industries and job markets. Munger's concern lies in the potential for mass job displacement and economic dislocation, which could contribute to social and economic upheaval. Munger's analysis doesn't paint a bleak picture merely for the sake of it. His warnings stem from a careful assessment of these vulnerable sectors and assets, recognizing their potential to trigger a chain reaction of events. Future uncertainty and prudent decision-making. As I wrap up this exploration of Charlie Munger's prediction, there is a key truth. The future of the world's economy is uncertain and complex. Munger's warning acts like a guiding star in this uncertainty, urging us to make wise choices about our money and plans. What we can conclude from this is the following: embracing preparedness. The economy is a blend of intricate systems, technological advancements, and intricate connections between nations. This complexity amplifies the impact of both positive and negative events. The prediction underscores that while we can't predict every twist and turn, we can ready ourselves for potential challenges. Making informed choices. The prediction doesn't just forewarn, it prompts us to take action. It encourages us to make well-informed decisions, from cautiously investing to planning for unexpected bumps.
The best and wisest are only going to get a few big opportunities, And you really have to step up to the pie counter and take a big helping when you get your small share. And I've been very good at that.
So what does the opportunity look like?
It looks like a sure thing.
In this sense, it's a call to exercise prudence in the choices we make for our financial well-being. Applying critical thinking. A recurring theme in the prediction is the importance of critical thinking. Instead of following the crowd or being swayed by trends, it's about digging deep and understanding the reasons behind our choices. Applying this kind of discerning thinking to our financial decisions can steer us away from impulsivity. Learning from the past. There have been numerous economic upheavals, each with its own lessons. The prediction draws from these past experiences, reminding us of the value of studying history's patterns. By learning from past mistakes, we gain valuable insights to help us make more informed decisions in the present. A call to responsibility. Ultimately, the prediction isn't just a message for individuals, it's a call to collective responsibility. It prompts us to think beyond our own actions and consider how our decisions can impact the broader economic landscape. By heeding this call, we contribute to a more stable and equitable financial future. As we draw insights from this prediction, we carry forward a sense of empowerment. Though the path ahead might be uncertain, our capacity to make informed choices remains within our grasp. Remember, while we can't predict every twist, Munger's wisdom guides us to be prepared and think wisely about our financial choices. If you liked my video, I encourage you to like, share, and subscribe to my channel, where I can help with more topics you must be looking for.